Hey everybody, Jake with TrendSpider here. Going to go over an interesting chart setup into Friday. Starting off with, we have AKER. What we have here is a recent cross of the SMA 20 through the EMA 50. That may seem like a pretty untraditional thing to look at, but if we look in the past, we've seen that this move has actually yielded some pretty strong moves afterwards. Sometimes with moving average crosses, there is a little bit of a lag. And what we're seeing here is the price is kind of retesting this area. The question is does this kind of bounce off this area, or is there a continuation down to, let's say the 23-cent mark, which would be support below? The thing to kind of look at here is the other time frame, which is the weekly candle. And what we can see here is back in February, which is very interesting because back in February was essentially when the market started to really move down. And now we're kind of in a similar situation with the market having some trouble now. So what we have here is we have an initial huge move up with a massive amount of volume here. We've got the same type of move here, essentially with this big spike in volume. And then we've got 2 weeks now of kind of low volume selling, really right along the SMA 20 on the weekly chart. So this setup is very similar to this one, whereas one, we've got the spike in volume and the spike in price, and we've got the 2 weeks of, downward action. Same thing here. The market is in a very similar state where there's a lot of volatility right now. It does look like there could be some more downside. And interestingly enough, generally when the market is moving down, penny stocks like to really have their day. This entire move up happened in the last broad market move down, and we are now in the same exact spot. So if we can break out through this falling wedge next week, this could be an interesting one and possibly even test, the exponential moving average around 52 to 53 cents. As the price, as time goes on and the price changes, the moving average price is also going to change as the price is a function of this line. Or this line is a function of the price. As the price continues to move, this moving average is probably going to slowly move down. However, if there's a big spike next week, this would be the area to watch, around 52 to 53. If it took a little longer, the price would probably slowly start to come down. However, it is something to watch. Keep in mind, there can always be a little bit of a move down further to try and test the area below. In this case, let me get rid of some of these lines. In this case, the price looks like it could possibly test or kind of break down here through the SMA tomorrow. Sometimes technical traders will exit a trade for that reason, and then they get stopped out and then end up buying back at a higher price. Anything can happen here, but based on what I'm seeing, it does look like a very similar pattern to what we had in February. All patterns do not have to repeat, but they are something to keep in mind for further price action into the future. So this one is definitely on the list for the coming weeks to see if we can have this type of action once again that we had in February. Thanks so much for listening in, and have a great night.